Good afternoon, ladies and gentlemen. Of course, I want to say good afternoon to those of you who are joining me here on the East Coast. It is just after 12 noon Eastern Time. I also want to say good morning, of course, to those of you who are joining us from the Central Time Zones, the Mountain Time Zones, or the Pacific Time Zones. And we always want to say good evening. If any of you are joining us from across the pond, parts of UK or parts of Europe, good early morning if any of you are joining us from parts of Asia or Australia. Welcome to today's presentation on researching and analyzing a new options position. We, of course, here are going to talk about the steps in the process that Ernie Zerenner, the president and founder of PowerOptions, uses to analyze a new position and research a new position, and myself uses as well. For those of you who don't know me, my name is Mike Chupka. I am the Director of Education here at PowerOptions. I've been working with PowerOptions for the past 15 years and trading options for the past 16 years as well. I do a lot of the webinars, articles, and of course I've written a couple of books and I've presented different seminars as well across the country over those different time frames, the last 17, 16 years or so. But anyway, that's just who I am, but let's talk about why you're here. What we're going to cover today is tips and tricks on analyzing a new option positions, the steps you can use to narrow down potential trades, whether you're doing income strategies or whether you're doing speculation by buying options, and of course the tips to avoid mistakes or to avoid the unknown as well. Now we're going to use the PowerOptions tools to illustrate our steps, but any investor is still going to get useful information out of today's presentation. Okay? We are going to discuss the processes, whether you use our tools or whether you use any other tools, of things that you want to look out for. And we're going to focus on one strategy in the first 15 to 20 slides and the steps that I would use to analyze a position. But we're also going to spend some time on how you can narrow down your universe of options more quickly, save time with your research and analysis, and still follow the steps to avoid potentially the unknown. You can't really avoid the unknown, but we can do a lot to avoid certain things that get investors into trouble. Now, before I go in, let me just talk about what is PowerOptions for those of you that are unfamiliar with our service. PowerOptions is essentially a one-stop shop for self-directed options investors. Ernie Zerenner created the tools back in 1997 really to trade his own personal account. We offer patented search tools to identify positions that match your personal risk-reward tolerance, stock, and option criteria. And we, of course, have tools for researching and analyzing a position and powerful tools for managing and tracking your various options trades. We have a virtual library of archived webinars, tutorials, and articles to help you get more familiar with the various option strategies and management techniques, as well as, of course, using the PowerOptions tools. For certain strategies, we offer signature tools. I have a feeling we'll look at some of those today for looking up positions one stock at a time or one strategy at a time as well. We do support over 23 of the most commonly used option strategies. And everyone here at PowerOptions, of course, myself included, we are all options traders. We use these tools on a regular basis. In fact, the only thing we don't have at PowerOptions is we're not a brokerage house. We don't have a trading platform. But when I go to make a trade, I've done all my research, analysis, evaluation, and what-if scenarios in PowerOptions first. I only use my broker to log on and place the trade after I've already made the decision. Okay? But now, let's talk about what we want to do. We want to open a new options trade. Well, where are we going to start? Well, you may start by finding a stock that is bullish or bearish, maybe has a neutral recommendation to match the sentiment of your strategy. So let's say you're doing bull put spreads and you get a list of stocks from a third-party provider that say, hey, these are our bullish stocks for the next 30 to 60 days. So you find those stocks or use a criteria to identify stocks at another third-party provider, but then you go to an option chain and say, okay, I want to do a bull put spread. What has the delta I want? Does the credit between these two strikes I'm going to use match what I need for my goals in my portfolio? Or doesn't it? Or do we do the reverse? Do we look at options chains first, or maybe a little spread combination trade at your broker's house to find positions that have at least X amount of net credit, Y amount of return with deltas under 0.2, but then you go back and say, okay, well, is this actually a bullish stock or a bearish stock if I'm doing a bearish position? Well, of course, we want to do both at the same time. That's the benefit of power options, is in our strategies, we can put in specifically one for the stock criteria, for the option criteria in a given strategy at the same time to see only the positions that match that. Okay? But first, once we decided that this is a stock we want to use for a bullish position, or this is a spread that we want to use, and then we want to go that way, what are we going to do to analyze the position? What steps should we take to research and analyze the position before placing a trade? All right, I'm going to start off with a simple covered call. And don't worry, we'll get into other strategies later. But a simple covered call, we're going to buy a stock. Let's say we're more bullish. We're going to sell an at or out of the money call against the stock position. So here we see an example where we could buy Avis, CAR at 32.58. We see a strong return for a 23-day trade going out to August 18th, 23 days out in time. We could sell that August 33 call for $2, and we could get a max return if assigned of 7.9% for a 23-day trade. Okay, that sounds fantastic, and it looks fantastic as well for 23 days 8. Okay. Steve, I am showing full-size view on my screen. I'm not sure why it's not coming out as full-size view, but my view shows that it's going full screen here. If you click on the File menu, or if you click on the Options, you may be able to increase it to full screen, but I'm selected to show full screen on my position. Make sure it's opened up all the way. Okay, that's the best that I can say, because it looks like it's showing full screen from my sharing view on the position. I can maybe change something here. I apologize, give me 1 second. I don't think this is going to adjust anything. Yeah, it still shows that I'm showing full view here on my position on my screen, okay? All right, Steve, you maybe have to adjust your settings with that GoToWebinar, GoToMeeting platform that appeared. Mine's showing up in full screen as well, so that might, I'm not sure if that did it for you, but try that out, see if that works. Okay, so here we're looking at a covered call, slightly out of the money, which means we're relatively bullish on the position. But the stock has to match the sentiment of the trade. The stock's at 32.59. We're receiving $2 of net credit, so we're looking about a 7.5%, 8% downside protection. The stock could fall to 30.59 before we're technically losing money on the position. Right? That looks like good protection. But is this a good trade? Okay? We're interested in this trade. Now, whether you found it yourself or we found it ourselves as we are interested in CAR, we've been tracking the stock for a while, and we want to generate some income against it. Or you've had it in your account for a while, and you want to generate some premium against it. Maybe you subscribe to a covered call service or a stock picking service, and it was recommended to you with the emails that you get on a daily basis. Maybe a friend or a colleague recommended a covered call in CIR because the premium is good. Okay? But in either case, we have this trade. We have this idea for a trade. Now, most of my day, half of my day, consists of this. Is this a good trade? Okay? Before we can even discuss if it's a good trade, we need to research and analyze the position, the stock and the option, to make sure it suits what we want. During the day, I'll receive several phone calls. A customer calls up and will say, I found this on the search and PowerOptions, or hey, I was looking into this trade. Is this a good trade? I can't give direct trading advice. Here's what I can show you, and here's what I will show you. I'll walk you through, and the first things I'm going to look at is the stock chart. Naturally, does it match the sentiment of the trade? General's covered calls, we're neutral to bullish position. We want the stock to stay the same or move up in price. The example we looked at is slightly out of the money, so it's a little bit more bullish. To get the max return, we need the stock to be trading above 33 if that's your goal. Okay, so we want to make sure that we're entering into the right sentiment. What else do we want to do? We want to take a look at the company information, recent news headline. Maybe if you got it recommended by a friend or from a stock picking service, you don't know the company. You're going to want to take a look at the profile and the company information. Maybe compare it to competitors as well so you know what to look out for. Also, things coming up, the events. earnings, dividend, or other, what to avoid. Okay? And of course, once we've looked at that and we have a gauge of where we think the stock's going, our expectation for the stock doesn't match our sentiment, are there no whammies or no gotchas out there in the recent headlines, news, and information, maybe we want to evaluate other strikes. We want maybe a little bit more protection. Maybe we're a little bit more bullish now, a little bit more aggressive. Maybe go with a higher strike to get a higher return, less protection. Okay? Or more likely, we want to see more protection and more return now that we know more about the stock itself. And of course then, got to take a look at the profit and loss chart and evaluate the what-if scenarios. Am I comfortable with the position if it accidentally falls 5% or 6% for some unexpected event? Or if it suddenly gaps up 10% tomorrow, am I still comfortable with the return? Okay? That just helps you gauge your trigger points, your exit points, and your roll strategies for the position. Now we're going to walk through this covered call trade, and as I mentioned, don't worry. Later on in the presentation, we're going to talk about other strategies as well. But what I'm going to show you is the analysis that I would use if a customer called up and said, is this covered call on CAR, Avis Rental, is this a good trade? The same process I would use for any trade, credit spread, debit spread, buying a long call, married put, calendar spread, is the same process I'm going to walk through, okay? To evaluate any trade that's presented to me by a customer, a new position I'm entering, or if I did hit a trigger point that I set on an initial position, where if the stock fell 5%, I was probably going to manage it, I'll go through the same process to reevaluate the position to make sure that it still matches my sentiment and of adjustment I would use. Okay? But let's take the CAR covered call. The first thing I want to look at is the stock chart. Now on PowerOptions, we link to big charts, and what you're seeing here is the screenshot from about 25 to 30 minutes ago of CAR. Ernie and I, anytime you call up and say, okay, I see you guys are using big charts, or in some of your webinars I saw this view of this charting service you were using, why do you have it set up this way, and what are all these lines I'm looking at? All right, well what Ernie and I will set up on big charts where you can store it and have it saved is that we typically both will look at a 3 to 6 month chart. Nothing wrong with going further, but when I'm opening a new position, a credit spread that's 14 days out, maybe a month out, or a covered call, cash secured naked put, a collar, I'm looking at 3 to 6 months out in time. Here we're just looking at the 3-month chart. We select the SMA 20. Okay, so the line in the middle here is our 20-day moving average. If I'm bullish, I do want to see stocks that are above the 20-day moving average. If I'm bearish, I want to see stocks that are below that. Okay, trending downwards, trending upwards. The main reason we take the 20-day moving average is because Ernie and I also like to look at the Bollinger Bands. These are the red lines that are wrapped around our stock chart here. It's based on the 20-day trend, okay, 20-day calculation. What we typically look at are things such as the Bollinger Band breakout to the upside, or is the stock sort of riding the upper Bollinger Band, or has it had a breakout to the downside, indicating a bearish trend. I personally also look for the MACD crossovers. Here we see we had a negative crossover where the MACD dropped below the EMA 9, the signal line. We saw what happened there. Yeah, it's a little bit of a lagging indicator, Tom. You just commented that. I agree. But I'm using this as a confirmation. So if I see a position that's above the 20-day moving average showing a Bollinger Band breakout, if my MACD is still negative, it might still be a good trade. But I do want to look for that crossover moving above the 20-day moving average. This is a great time to enter this trade, okay, especially when it jumped above the 20-day moving average and then had a Bollinger Band breakout. I'm not saying we missed the boat here, but what am I looking for? Oh, I'm sorry, I've also selected the RSI just to see a trend more or less. I know a lot of you like to look for positions if the RSI is maybe 75 or higher, you think the stock's overbought and you're going to look to sell it. Or if the RSI, is at 30 or below, maybe at 25 or so, you think the stock's oversold, you're going to look to buy it at that time. But I like to look for more of a trend. Is it continuing in the trend that I want? And of course, I want to see volume. Is the volume increasing? Is it decreasing? Is it showing strength or weakness? This is how I set up my chart on big charts, and you can store the settings. So I'm looking for specific things. We're going to go a little bit more into that as well. So what would I look for? Again, in bullish positions, when I analyze a stock, I want to see a stock that's above the SMA 20 and trending upwards. I want to follow the trend. For really aggressive bullish positions, long calls, long puts, long calls, excuse me, or even married puts, I might look for a Bollinger Band breakout or a stock that's been riding that upper Bollinger Band in a continued upwards trend. Also going to take a look at, was there a recent MACD crossover, and is the MACD continuing that upward trend? Now, I prefer to see an upward trending RSI and consistent or increasing volume. All right, now let's take a look at the chart again. What do I mean by that? How does that break down? Well, I want to see a stock that's above the SMA 20 for any neutral to bullish position. Bull put credit spread, bull call debit spread, covered call, naked put, a standard collar. Okay. Also, married put position, and maybe even buying a long call, but I might look for more of a Bollinger Band breakout position when doing a long call speculating growth. Okay. All right. Guy asks, where are the settings? Okay, this is in big charts, and you link to PowerOptions. You can link to big charts, and you can set big charts the way you want with the settings. We'll take a look at that a little bit later in action. All right. What else do I want? I want a stock that's quote-unquote riding the upper Bollinger Band, and we're seeing that although it's pulled back a little bit. Okay, but it's been moving up, trending with, pushing the upper Bollinger Band up as well, so it's been in a good uptrend. I'd like to see a MACD that is positive, where the blue line is above the red line, okay? The MACD is above our signal line. That's what I'm looking for, and I like to use crossovers. Here's a bearish crossover where the blue line dipped below, and right about here, we started to see a more positive increase. We saw it condense here, and then it started to move up again, and it's been trending good. But looking at this chart, this is a concern. Those two lines are getting closer together. Okay, it's not continuing the spread, getting wider for me. It's starting to condense a little bit. That's a little bit of a concern for me for something that's neutral to bullish. And remember, we were looking here at the 33 strike. The stock's bouncing around between 32.50 and 32.80 today while I was putting together this presentation. And we noticed during that other upward trend that we saw, the RSI had a little hiccup, but it was generally trending up, but now it's stabled and dropping down. So these are two concerns for me on this particular position, and also the volume has been increasing, but we see it has been dipping down recently. Okay, I'm not saying this is the only way to read a chart. Many of you have your own charting services. I understand that. Many of you have your own settings. You might want to use other settings for your charting, and others are available there at Big Charts. I know there's other services, other charts that investors pay for and use, perfectly fine, but you can set up big charts in many different ways. You can use parabolic SAR, MA envelopes, the moving average. You can select just a few earnings, dividends, for example, other indicators instead of MACD and RSI, the Williams percent R, if you use fast or slow stochastic, percent short interest, rolling EPS, and more. The chart I showed and the settings I use are what Ernie and I prefer to use for our personal trades, regardless of strategy. And if you call up, you're on a coaching session and you say, well, how would you set up the chart? Ernie will walk you through those same 5 indicators that I did. We take a look at the 20-day moving average, Bollinger Bands, MACD. I tend to use the RSI and volume. Ernie, I don't think, uses RSI as much, but that's perfectly fine. Everyone has their own way to do it. But again, what's the important point? Do the trends match the sentiment for your position, and what would give you the max return? With this Avis covered call, with this short August call at 33, I want a stock that I feel is going to continue to move up. I've got some hesitation here because we've just seen a recent sort of condensing of the MACD. It's not continuing that trend. We see a dip here in the RSI. It's losing a little bit of ground. So that might be a little bit of concern going forward. Yes, stocks always fluctuate, but I may want to look for something I have a little bit more confidence in going forward. Okay, so we have concerns on the chart. But what next? Okay, as I'm researching the position on PowerOptions, whether using your own broker or another service, the next step I want to look at is the company information, the news, and maybe the profile. Why? Is there any headlines I should know about that might cause an unexpected movement in the stock that's against my sentiment? What are some of the things I would look for? You may see rumors or headlines if you're looking at a high return company, let's say a high return call or high return premium on a biotech. Well, if they've got a phase 2 or phase 3 drug trial coming up in the next 2 weeks, expecting results in the next week or 2 weeks, that's something you need to know. That stock could gap up 50 or 60%. Hey, your covered call would look pretty good, but I've also seen those gap down 80% if it fails. No amount of high premium, even with a 15 to 20% downside protection of an overinflated premium, is going to help you if the stock drops 80%. You're still at a significant loss. One thing I got trapped with a few years ago is everything looked good for me on, I think it was El Paso Pipelines, if I'm not mistaken. Everything looked good chart-wise, technicals. The position I was entering matched my criteria for risk and reward. Everything looked good. I didn't check the headlines. This is about 5 or 6 years ago. Well, with oil stocks and mining stocks, there may be some discussion out there about they're trying to get a lease from a foreign company for the rights to drill or the rights to mine. That's what is with El Paso. They were looking for a field in Brazil. They're trying to get the lease rights. They did not get the lease rights, which was coming out 2 weeks after I opened the trade, and my expiration was about 2 weeks after that as a 1 month out trade, and the stock fell 15%. Now, it's something I should have seen, but I didn't realize it. I didn't look at the news in the headlines. Other things you might want to pay attention to in the headlines, of course, are, is there any news about a recent CEO shakeup, boardroom shakeup, or anything of that nature? News of a merger, potential buyout, things of that nature. This is what you want to, I know it sounds simple, and I know this sounds like a basic review, but this is the steps I will go through when opening a position for myself, or even if a customer calls up. Why do I mention the profile? Well, if you called up or sent me an email and said, I'm considering a position on XYZ, well, I don't know what XYZ is. I've never heard of it. So I want to take a look at the profile. Not only look at the profile to see what the company does, see maybe what sector or industry they're in, but now I want to see if there's strength in the sector, or is the sector weak? What are the competitors in the position? Okay, and how did this stock stack up against the competitors? I might be opening a new married put for our Fusion subscribers at Radioactive Trading on Activision Blizzard. But before I open that position, I'm still doing due diligence and comparing it to EA Arts and other companies that are in that same sector, in that same industry. We, of course, want to know what earnings and events are coming up. In addition to earnings, things that I mentioned, phase 2 or phase 3 drug trial, a pending patent lawsuit, any kind of judge ruling, what is coming up that may cause hesitation for entering the position. And of course, there's other things you may want to look at. I usually don't go this deep, but we can access things such as the balance sheet, cash flow statement, and opinion indicators. Okay? These are the things you won't see in a chart. You may be able to estimate or assume something's coming up based on a high inflated premium or a low inflated premium, for example. But these are the things that we want to know ahead of time to avoid uncertainty. I don't want to open this trade and 7 days later found out, yes, they just removed half of their board members, replaced it with people who are inexperienced based on the vote from the shareholders, and the stock falls 12%, maybe 10%, and I'm in this covered call that had some protection, but I don't want that sudden mix-up in the position. I'm neutral to bullish. I could have seen that ahead of time had I paid attention to the news and the headlines. All right? But let's say we looked at the chart. We had some concerns. We looked at the news, the information. We didn't see any whammies. Okay? No whammies. All right? So now we're still interested in this position. Next, I want to take an overall view of the stock. I want to look at everything potentially that's available, and I'm going to use, of course, the PO quotes page. But the first thing I'm going to focus on is certain aspects. Now, I probably already looked if there was earnings or if there was any other events coming up. But if I'm looking up a stock for you, after I've looked at the chart based on your strategy, after I've looked at some of the news and headlines, I'm going to take a look at the quotes page. Now, I apologize, this slide, I couldn't get it to fit really well, but let's just take a look here. This is what we call the quotes page, or the stock research page in PowerOptions. A lot of information, a whole bunch of things on the stock for number of days above a 20-day or 50-day moving average, a whole bunch of things for Springgate, Z-score, all that stuff. But my first looks, my first glance is going to go right to the middle of the page and look at things I may have already seen. What are the next earnings? When is the next ex-dividend date if it's available? This one's NA. It does show a last dividend of 110, but that was a special dividend paid. So CAR is not paying a dividend. I don't need to worry about the ex-dividend date. But I see earnings are coming up on 8/7. I also want to look at where am I maybe in the 1-year range. Am I up at the top? Am I near the bottom? Here we're kind of right in the middle. That's okay. And we do show a positive earnings per share growth. I want to see that for a neutral to bullish position. I want to see good growth, reflection of good management on the position. Another thing I'm going to want to check is our volatility. Now we see here the 50-day volatility is at 0.62, but the 20-day is at 0.37. That's kind of interesting. We did see that in the chart. It had been moving up. 2 months ago we had that recent decline when we looked at the chart, and that's why the 50-day is probably spiked up. But I also see this, the SIV. What is that? This is the implied volatility index, the average implied volatility of the near-term options. It's almost double the 20-day moving average. Okay, so what does that tell me? Well, it tells me the premiums are great. That's why I can sell that slightly out of the money call on Avis, get a $2 premium, and have a 7.9% return if assigned. But this just verifies that something is coming up. It's a measure of fear. The implied volatility on the option is a measurement of fear in the market, or uncertainty. And what's the uncertainty? It's right there. This just verifies it. Remember, we're looking at the standard August expiration, 23 days out, but our earnings are coming up on 8/7. Now, we know more. We saw the stock chart, and it pretty much had a trend that we'd want for a covered call or a bullish position in this example. We had some concerns with the MACD and the RSI. We didn't see any gotchas in the news or the headlines. We looked at the company profile. We delved a little bit deeper here, and now we know why we're seeing such an enriched premium. Now we know what we need to know. Okay? We might not have seen anything in the news yet because they're not talking about earnings. It's on August 7th, still about 10 to 12 days away, so no one's really posting what are CAR's expectations? What are the expectations for CAR Q2 or Q3 earnings? We're not seeing those yet as well, okay? Okay, so Guy says, how is this NA? Okay, for CAR itself, Avis, it actually doesn't pay a dividend. It showed a last dividend payment, and then it also showed on that screen a last dividend date of 2006. That was when the company released a special dividend. So the data is showing you that there was a last dividend payment that was listed, and there was a special dividend that was paid on that date in 2006, but it hasn't paid a dividend in 2006. It's not a consistent dividend paying stock, so it appears as NA. Okay, it was just a one-time special. All right, now we know why it's a 7.9% return for a 20-day trade, and it's out of the money. It's because earnings are coming up soon, our expiration date is after that, our uncertainty has inflated the premium. This still looks like a good covered call, but it comes with an unnecessary risk. I don't want earnings between now and expiration for these types of strategies. But maybe you still like it. Maybe you still think it's bullish. Maybe you still think that even though earnings are coming up, this could be a good trade, but maybe not at that strike. You want a little bit more protection on the position. You still like the trade, want to take a little bit more protection. As I mentioned, I would advise against this kind of strategy with earnings coming up. Everyone has their own risk-reward tolerance. So now, I'm going to help you find better protection. What do? We're going to compare it to other strikes. Okay, for this covered call example, I'm looking at the call chain on PowerOptions, where we show you, and you can customize it any way you want, but we show you the important factors if you were doing a covered call. Your downside protection, your percent if unchanged, the percent if assigned, probability as well. Now I could put volume, open interest, annualized return. You can customize that any way you want. But to keep it simple, we're looking at this position. Here we are, highlighted in red is the 33 strike we were analyzing for the position. The percent return increased a little bit, dropped a little bit as prices moved up and down while I was doing my screenshots this morning. But here we are at 7.6 assigned and almost a 7% downside protection. Okay, for a 23-day trade, that's phenomenal if we get it. Okay, but what if we're concerned that if there's a surprise, CAR might drop 10%? Well, we know the 6.7% downside protection, how far the stock can drop in a covered call before losing money on the position, would still result in a loss of maybe 3.3%. Okay, so maybe we want a little bit more protection. Maybe we can drop down to the 31 strike at a premium of 330, get a 10% downside protection. So even if the earnings disappoint and it drops 10%, we're still at break even. And if it stays above or gaps up, we can still make almost 5% for a 23-day trade. So we can compare side by side. We know the stock now. We still love the premium and the potential return. Had some concerns on the chart. Didn't see anything in the news headlines perhaps, but doing further research, we know why it's inflated. We know its earnings coming up. Not the best possible scenario for a covered call that expires 14 days or so after the, or 11 days or so after the earnings come out. But I can add more protection and still get a strong potential return if assigned for a 23-day trade. Okay, so we're comparing different strikes to see what works for us best. Now that we know the inside outs of the position, what suits our risk-reward tolerance? Stronger downside protection, still a good return. And hey, I would say there's nothing wrong maybe with going to the 30 strike, getting only about a 4% return, but having a 12% downside protection. But you can see that very quickly, but you want to compare the other strikes. Something give you a better probability on a credit spread with still a reasonable return. Now that you've looked at the stock chart, see how it's been fluctuating. See the trends. And again, whether you use Bollinger Bands or MACD or RSI or stochastics or Williams %R, how you analyze a chart, are you more comfortable with a little bit more insurance? Going deeper out of the money with your credit spread for still a reasonable return, going deeper in the money on the covered call to get a higher downside protection, still having a strong return for a 23-day period. Okay. Now, just for those of you that are PowerOptions members, I do want to review something for you. When you're looking at your other strikes, if you're looking at covered calls and naked puts, I'm going to use the option chain to compare the strikes. I'm going to customize it so I'm seeing just the information I want, comparing different strikes, covered calls, the percent return, downside protection assigned for naked puts, the naked yield, percent to break even, and maybe time value. Those of you doing vertical spreads, I'm going to use the spread chain, of course, when I get to the step of analyzing different strikes. Now that I've researched it, I know the position I found. I like the stock still, but now there's other strikes that might give me a little bit better bang for my buck. Probably not, but make me feel a little bit better with a little bit better probability, still getting a double-digit return. If you're doing collars or married puts or calendars on PowerOptions, you'll use the search by symbol tool. And if you're buying calls and buying puts, you're going to use our long option finder tool, where you can put in your stock, your expected target price for the stock, and your expected target date, and it'll show you which option would give you the highest return if it meets your target. Okay. All right. So now we looked at everything, but maybe I'm a little bit more comfortable with the 31 strike, with that 10% downside protection, that 4.8% return for 23 days, even though earnings are coming up. Analyzed everything. I know what's coming up. I know the chart. I can assume my expectations of the stock going forward. Rather than the 33, I'm interested in the 31. But I still want to go to the profit and loss chart now. The next step after looking at the chart, reviewing the company information, news and headlines, looking at the full detail of the stock to see any other events or any other data that might cause me hesitation. I compared the strikes, found the one I want, but I still want to go to the profit and loss chart. Now, the profit and loss chart, of course, in PowerOptions or maybe using your broker, yes, gives us a basic eyeball view of what we're looking at for the position. We know it matches our return goals. Remember, here we're looking at the 31 strike now instead of the 33. The stock price right here at 32.77. My break even, of course, the premium we received is down to about $29 or so. You know, we've got about $3.30 here, so we dropped it down to about $29.40. That's my break even at expiration. Now, when I'm using this chart, I can see what my profit and loss would be at the halfway point right away. 8.8 the day after earnings in this case. But I can see the stock's at 28. What is my gain? What is my loss? The stock's trading at certain prices, and that's at the halfway point. Okay, that's marked by the curved red line here. And then, of course, the blue hockey stick graph, that's just on expiration. All right, so when you open up a chart on PowerOptions, you see the expiration profit and loss chart. The curved red line is initially showing you the halfway point. Green line here is our current stock price, and this is our break even. All right? But what am I doing? I want to run what-if scenarios as well. I decided to stay with this position. It would be against my better judgment in this scenario, but we're going with this. We went with the lower strike for better protection, but I want to know, what can my expected gain or loss be if the stock does fall 10% after the earnings? Okay, it drops $3.20, so it drops down to about $29.50 or so the day after earnings. What can I expect? Well, I can just plug in my numbers, and if I expect a change in volatility, which, by the way, I would, right? Remember what we saw. A 20-day volatility on the stock was about 0.35, and the volatility on the options right now are around 0.657, almost double because of the earnings. So I might even add in here a shift in volatility back to the norm of 0.35 or 0.3. Either way, in this case, it would help us. If the volatility collapsed and the stock fell, well, that means we're probably paying much less to buy back this call. The call would go down to 70 or 50 cents, so we'd have a profit of $2.60 or $2.80 on the call. And we would have a loss, though, more on the stock. But again, it's only a small loss of 78 cents on the position, about 2% roughly, if the stock fell to that price. Okay, might even still be close to break even depending on what the market maker sets it. But I want to know this before I get into the trade. All right, what happens if this car gaps up 10% the day after earnings? Okay, let's say it went up to $35 or $36. Well, here we see at the halfway point, we're not going to be near full profit. We might still be a 6 or 7%, and I want to see that ahead of time. So it gaps up. That's great. But do I need to hold it to expiration? Because if it gapped up and the volatility stayed near the same, would that only give me a 2, 3, or 4% gain when I was potentially looking at near an 8% gain? Well, I want to know that ahead of time because I want to know how much premium might still stay in that call. Now, it's based on the Black-Scholes pricing models. That's true. And yeah, there still probably would be some implied volatility shift because of this particular event we're looking at. But again, I want to know ahead of time the what-ifs. What if in the next 20 to 30 days the stock drops 5% or moves up 5%? Am I still comfortable with the trade as a whole? What if it moves down 10% or moves up 10%? Well, likely if it moved up 10%, I'm still comfortable with this position. But if it drops 10, am I willing to take that chance? And if there is a volatility collapse, am I willing to take that chance? Okay. Jonathan asks, where do you find the profit and loss chart? Anytime you're looking at a trade, from the search by symbol, Jonathan, or your portfolio. You can use the edit more information buttons. I showed a couple of screenshots there looking at that. And you can go directly to profit and loss chart, and it'll show you the profit and loss for the position you're analyzing. You want to build a position on the fly, you can go right into the custom spread tool and put in the specifics for your position. We'll actually take a look at that in just a minute. Okay. Another advantage we can do on the profit and loss chart, or another thing I might do, is actually create a new trade. Here I am analyzing a covered call, and I've walked through the first 4 or 5 steps. I've actually selected a different strike for more protection. I decided to stay into it, going into earnings with the lower strike for the better downside. I analyzed the what-if scenarios. But as I'm considering it, maybe I want to say, well, maybe I am comfortable with that 4% or 3.5% gain for 23 days. Maybe I can add another option leg to that covered call to evaluate the risk reward of a standard caller. Okay? This would cancel a lot of the downside risk. Might even be able to use a higher strike and increase the protection. Okay? So now that I have that system built, well, I can change the call strike. I can add in a put strike that's maybe 10% below the current stock price, and maybe I'd create a collar now using the mid-range. We saw the 33 call. We went in the money for more protection. What would happen if we went with the August 32 call at 285 and bought the August 29 for 95 cents? Okay, now we have a standard collar position where I'm still making, okay, this would continue down here so you couldn't lose any more, still making maybe 3.3% if the stock stays above 32. But now even if the stock falls 10%, can't lose more than 6.4% on the position. Okay, so I would just add an additional leg on that tool to add in the August 29 put, maybe change the call to get a little bit different premium, or keep the 31 call and see how the 29 would combine with it. Okay, not saying that this would match your personal goals, but on that profit and loss chart, maybe even on the profit and loss chart in your broker, you're able to do this. We can say, now that I know what I like, I've analyzed it pretty much, maybe I want to add a little protection just in case it falls more than 10. What if it falls 20? What if it falls 30? Probably rare for this stock, but again, I can evaluate the structure of that new trade that would give me a little bit more protection in the worst case scenarios. Do I still get the return I want? Honestly, with this one, I probably wouldn't. You know, I'd probably stay with maybe going to that 31 call, potentially. Still getting about, what would we say, a 4.8% return, and having the stock be able to drop 10% before we start losing money on the position. Okay? Yeah, this gives me a little bit more comfortability, a little bit more confidence and ability to sleep at night going into the earnings on August 7th, but at the same time, is this matching the goals that I could potentially achieve on the position? And that's where your trading plan comes in, of course, as well. Oops, sorry, let me clear that up. All right. So there are other things that we can talk about. I'm open to that. But in general, this is our process. Whether I'm opening a new trade, even if it's a protected position, a married put or a collar that has limited risk, a speculative straddle, for example, on playing an earnings event coming up, or maybe just a 1 week or 2 week out bull put spread or bear call spread, this is the process that I use. And if you called me up and said, hey, I'm interested in opening this position, the first thing I'm going to do while I'm on the phone with you is I'm going to pull up the stock chart. I'm going to show my selections for Bollinger Bands, 20-day moving average, MACD, and RSI, and look at it and say, okay, what do I see in this stock? Has there been a recent crossover? Does it have a positive MACD? Does the Bollinger Band range look good? Is it trading above the 20-day moving average? Or if you're doing a bear call spread, considering a bear call spread, I should say, is it trading below? When customers call up and say, hey, I've got a covered call or a naked put that fell below the strike price and I'm losing 3 or 4%, I'm considering management on it, I'll look at the stock chart also. You're thinking about rolling the call down on your covered call, for example, because you want to try to lower the cost basis a little bit more. It's fallen 5%. You've got maybe a 3% loss on the covered call. You want to roll down a strike. Well, I'm going to look at the stock chart, and if I see a bearish trend on the MACD and the Bollinger Band for the position, it doesn't look to me that it's going to recover, I might mention that to you. I can't give you trading advice, but I'm going to mention that to you and say, look, this is looking more and more of a bearish trend. If I was opening a new position on this stock, I'd be opening a bearish position, meaning I don't know if simply rolling down the call is the best management technique for you at this time, because if the stock continues to fall, you can continue to lose more. We might want to do a different position or just get out of that with the minimized loss. I'll walk you through the numbers. You've got to decide which position to choose, but I'll bring that up. Did it fall because of something that came out in the news? Was it earnings that caused the stock to change direction? Was it rumors of a buyout, rumors of an upheaval with the board or the CEO, a pending patent lawsuit, judgment of Chipotle, or not judgment on Chipotle, but look at Chipotle. I believe it's the one that's been in the news recently with the neurovirus scare coming back up. That's something to stay away from. If you're very speculative, if you're very aggressive, you want to take risk, maybe a straddle, strangle, or something that could benefit if the stock swings back one direction or the other might be an advantage. Or maybe the fall's already been taken into account. Okay? Things I want to know. Do you have earnings coming? I get this a lot, by the way. Someone says, hey, I'm looking at 2 stocks that are priced at $70. I'm looking at selling a naked put. One offers a 1% yield. The other's got a 5% yield. They're both trading at $50. How is that possible? Well, one of them probably has earnings coming up. Or if you're telling the biotech, I'm going to assume, seeing that inflated premium above the norm, it's got a phase 2 or phase 3 drug trial. And I'm going to tell you to avoid a directional trade on that as far as neutral to bullish or neutral to bearish, because it could swing either direction significantly. Okay. And then we want to take a look at the other strikes. You've got a position in mind. I've got a position in mind. I just want to look at the other strikes that are there. What gives me the best risk reward, the best comfortability for what I want for my trading plan, and the potential if the stock swings against me. Okay. Run the what-if scenarios on the profit and loss chart. Make sure you're comfortable. If X or Y does happen, you're still comfortable with that particular trade. And then, of course, you can access all of those using that More Information button, the quick links I mentioned on PowerOptions. Again. But, of course, all of that in mind, I'm going to take some of that process out in the beginning. All right, when I look for a new trade, I'm going to set up the search in PowerOptions to limit down the universe of options based on what I'd want to see to begin with. Okay, so we're going to jump over to PowerOptions now, and I'm going to set up a search for other strategies from scratch to match what I would look for in a position. And then we're going to walk through the steps again. Before we do that, one poll today as always. I'm just going to go ahead and launch our poll. Let me know. We already covered a little bit of covered calls and naked puts, but we'll still look at that potentially too. What option strategies you're trading or researching right now? Are you mainly looking at covered calls, cash secured naked puts? They're kind of parity trades from one another. Some might say kissing cousins or trading cousins is a better term. Are you looking at vertical spreads, bear call credits, bull put credits? Yeah, I even include condors in there. Are you buying calls and buying puts, maybe doing straddles, strangles as well? Are you looking at protected positions, married puts, collars, more? We were even married calls if you're doing bearish protected positions, short collars, we can put that in as well. But let me know what you're trading. And of course, if you're trading something else, just mark other and then let me know in the comments there in the question pod. And of course, Jonathan now will show you where I access this information, the profit and loss chart and more. And of course, we'll just do the same process, but a reminder, and we'll see how we use the PowerOptions tools to do that. Okay, ladies and gentlemen, we do have a winner today, but that's okay. Like I said, I'm going to actually look through all of them in the 15 minutes very quickly but thoroughly with the 15 minutes we have left here in the presentation. Let me go ahead and close that poll to move forward here. Let me share the results with everyone. 33% of you are doing covered calls and cash secured naked puts. I've got 29% of you doing the vertical spreads as well as the married puts and collars, and 10% of you doing call buying. No one else said other. Okay, no problem. Let's hide those results. And what I'm going to do now is navigate over to our PowerOptions suite of tools here. Switch screens. Okay. Oh, I'm sorry. There we go. Okay, my apologies, folks. Let me just switch screens here. Okay. And let's see, make sure that view comes up. Okay, my view is coming up, showing full screen again. Let's see here. Let me. Sorry about that. I'll show this. That's fine. There we go. Okay, let's see if that comes up a little bit better. All right. So here we're just looking at the PowerOptions suite of tools. I got most of the strategies selected. But what did I talk about? Let's start with covered calls. And the naked puts would be very similar. But for the 33% of you that are doing covered calls, I talked about how I would look at a chart, what I would do for the comparisons, but I'm going to put most of that into the system already. So I'm going to go into the search. And of course, we have default settings that you can use as a stepping stone to create your own personal screen. Looking at the weekly picks of the day here that Ernie developed. But I'm going to change it. Okay, I'm going to go right from scratch. And to look across the universe of options, I'm going to select standard August expiration rather than use weeklies. But what am I going to look for? Well, first things first, I'm going to select my time frame. And this is the process I'll use in any strategy. I'm going to do it with spreads in just a little bit too. All right, so we're going to go to August. Now I want it to match my trading plan. I'm going to open a covered call for August. I want at least maybe a 4 or 5% downside protection. I want to enter a covered call where I'm getting enough premium where even if the stock fell 4 or 5% against my goals, I'd still have a positive return or a break even. But I still maybe want to make at least a 3% maximum return if assigned. And maybe you want at least a 1% or 2% time value. We can put that in as well. I'm not going to worry about minimum requirement for options bid price, but if I had a minimum requirement that I want to receive at least 75 cents or $1, I could plug that in. I'm going to look for some basic liquidity, an option volume today of greater than 0 and an open interest of greater than 10. Very basic, just a starting point. But that's all I'm doing. I'm not worried about implied volatility, time value, or more. It's a neutral to bullish position, but in this case, as it might be with naked puts, if you're doing cash secured puts, you've got to put the cost up, and I've got to buy the stock. So based on my account, I know that I'm only going to be looking for stocks that are maybe between $5 and $105 per share. Everyone has a different account size, but I'm going to start with that. We know that this type of strategy, or a bull put spread, bull call debit spread, even a bear call spread, I don't want a surprise. Surprises happen. But I'm going to make sure that I'm avoiding earnings between now and expiration. I'm going to check that box here in the fundamentals. Also, because this is a neutral to bullish position, remember when we looked at that the company information, the quotes page, I was looking for positive earnings per share growth for a neutral to bullish position. So I'm going to set my earnings per share growth to be at least 5%. Growth in earnings, positive management of the company, and growth. Okay? Now, remember what we looked at in the stock chart? I said that I wanted stocks that were above their 20-day moving average on the chart to match the trend of my bullish to neutral position. I also probably wanted a position where the stock's near the upper range of the Bollinger Band, or at least not near the bottom. And I want a position where it's had a MACD crossover and the MACD is above the signal line. So I'm going to set that. First, very simple. Moving average available in all 23 strategies. I'm going to just select stock price on the three-tiered view here to be greater than the SMA 20. Now you saw other selections. I have customers that prefer to look for stocks, covered calls, and so forth where the 50-day is above the 100-day, or maybe the 100 is above the 200-day. That's perfectly fine. Maybe the 20 is above the 50. So you can toggle that any way you want to based on your preference. Down here at the bottom is my MACD lines. So I'm only going to look for stocks. I'm telling the system to just find me stocks that have a MACD where the MACD is crossed over the signal line at least 2 days ago. I'm going to tell the MACD to be positive, to be above that black line, the divergence line there. Okay. Also, I want the stock to be above the 20-day moving average, but I also probably want the Bollinger Band to be up near the higher range and trending upwards. The percent Bollinger Band 20 is percent BB20. What this shows us is that if a stock's trading right at the upper band, the percent Bollinger Band range would be 100. If it's right at the bottom, it'd be 0. If you're looking for a breakout, I'd be looking for stocks, that had a recent breakout, potentially for a long call. I'm probably going to look for a Bollinger Band 20 that's above 100, or maybe even 105, that's recently broke out, just like we saw with Avis, how it broke out and continued moving forward. But I'm going to set this more simple. I'm going to set this greater than 75. So it's up near the top, not necessarily been moving up, but it's up near the top as well. I'm not going to worry about the percent of 52-week range or the RSI right now. I'm going to just use the chart for that. But I want some good volume. I'm just going to put in stocks that trade at least 750,000 shares on average per day. Okay? Is that a lot of information? What am I doing? I'm doing a covered call where I want a good percent if assigned of at least 3%. Good downside protection. I didn't put anything for premium. I'm looking at percentages. But for a covered call, I want a trending stock. I want something showing a positive MACD, stock price over the 20-day moving average, recently had a MACD crossover within at least last 2 days, might have been 10 days ago. And of course, I want it near the upper band, and I want some good volume. At the same time, I'm not taking any chances on stocks that have earnings between now and expiration and an earnings per share growth of greater than 5%. That alone, let's count. Expiration, downside protection, percent of assigned requirement, liquidity. So 1, 2, 3, 4, 5 for volume, 6 for Bollinger Band, 7 for the trend, 8 for the MACD, 9 to remove earnings, 10 for growth, and then because it's a position stock price. I just put in 11 criteria. That may sound like a lot, but isn't it common? I'd want a good return. I want stocks that are trending upwards. I want to see MACD strength, and I want to avoid earnings. I could even put in those 4, but I've narrowed the entire universe. And remember, I selected standard August expiration, which means all 4,800 plus optionable stocks, ETFs, and indexes are available, but I've automatically narrowed it down to 13 total results. I'm saving time with my research and analysis on this position because I put in what I wanted. Am I still going to check the stock chart? Absolutely. Let's take U.S. Steel here, 26.43. It's interesting that these two stocks are right at the same price, 26.44 and 26.43. We've got a couple different strikes here. The 26, for example, for U.S. Steel is offering a 4.3% return and a 5.7 downside. And for our solar, it's a little bit higher. It's a 5.5 and a 6.8%. It's got more implied volatility. So let's actually take JKS and let's take that 26 strike. Am I still going to look at the stock chart as my first step? Absolutely. I'm going to use the more information button. I'm going to go to charts. I'm going to go to big charts. Why? I know it's got the MACD that I want. I know it's got the Bollinger Band that I want, but this punctuates it exactly. It's turned. It's pulled away. There's a drop recently, and it kind of fell here. I'm still where I want to be. It's had a good run, but I'm kind of concerned about this, aren't I? Okay, it looks, and the volume is decreasing. This must have been an earnings event recently, which is why it showed up, because it did not have earnings between now and expiration. So I put in my criteria. This, by the way, is how I open a new position. I know everything's going to have the stock trend that I want, but I still want to check the chart, because right here, seeing this movement, I'm not sure if this is the best position. I would now check the news and the headlines, by the way, on Jinko Solar to see was that drop because of earnings that recently just passed, or was it because of something else? Weakness in the sector, weakness in the industry, something, of course, that maybe new rules that the administration passed that don't benefit solar, and the market reacted to that. Those are all things I want to know. Why did that drop happen? Okay, but looking at the chart, if I see something in the news or the recent events that cause me hesitation, I'm done. Not even looking at anything else. But let's take that U.S. Steel one at 26.43, and let's take the 26 strike. First step, look at big charts. Now here we have something that looks pretty decent, in my opinion. Now, it's condensing, but it just had that breakout recently. You could say, well, maybe we missed the boat, but usually when you see a breakout, it's an indication of an upwards trend. Now, it didn't hiccup here, but of course, I would use the MACD there once it crossed over as a trigger point or an exit. The MACD is crossed and bounced. Okay, so it's crossed over and bounced up, and the RSI is moving up as well. We know we don't have earnings between now and expiration. I'd still look at that, but this is a better chart. Moving up, just crossed over recently, showing some strength. Big jump there. I'd see why the news, the earnings, the profile, why did that come up? Why is that trending? Is it because of earnings just passed? Nope, that was about 80 days ago. Okay, so earnings aren't coming up for another 30 days, probably after August expiration. Okay, so even though these stocks were at the same price, and the 26 here in Jinko Solar is offering a higher premium, I'm probably tending more to U.S. Steel. Next step, same thing. I'd look at the news, information, and profile. I'm not going to walk through that, but I'm really looking at the news to see what favorable news came out that caused this to jump, or was it a competitor's earnings that was positive that brought the industry up? I want to know that as well. But real quick, what else am I going to do? And I could do it just by customizing my data screen here in PowerOptions. I'm going to go to that stock research view. All right? Why? I want to see when the next earnings are coming up. Oh, okay, so they just came out yesterday after market. That's why there was that jump. That's why you have that crossover. I kind of like it. As we mentioned earlier, dividends coming up. The last dividend date was on 5/8. They haven't released it yet, but I'm assuming that means the next ex-dividend is going to be on 8/8. Does that cause me hesitation for entering the slightly in the money covered call? Well, if I want to stay in the stock long term and continue to sell calls against it month by month, that might be a hindrance. Because remember, I'm selling a 26 slightly in the money call, and if it's still above 26, when the next ex-dividend date comes out on 8/8, I might get assigned early. Now, if I'm just opening a covered call in the hopes to get assigned, I don't mind that. Let them assign me early and take the dividend if they do that. I'll get out with 14 days before expiration with the max return I wanted because I was assigned on the position. Okay. Positive earnings per share growth, of course, buoyed up by yesterday's earnings announcement. Okay, so I know I don't have that risk there, but it looking like a good position that matches my criteria and matches my stock chart. All right. So, third step, I looked at the news. Well, we didn't go through that. I looked at the quick look to see the information on the stock. Now, what about other strikes? What did I do before? Same thing I'm going to do now. I'm going to go to the option chain. And this one I didn't customize, of course, but I'm sorry, let's go to August. I got to adjust to August. My apologies. So the 26 strike is offering me a 4.3% return for 23 days. If I'm comfortable, my goals are to make at least 3%, I could get a little bit more protection, right? We could go to the 25.50, 6.8% downside, 3.5% return if assigned. Still maybe matched my criteria, but now I've got a little bit more safety. Or if you looked at that chart, earnings just happened, you saw the MACD crossover, a little Bollinger Band breakout, and now you're thinking the stock's going to run. You might want to take a chance. Be a little bit more aggressive. Going with the 27, less downside, of course, maybe a higher potential return if assigned. Now that you've seen the stock chart, now that you've seen the news of what has happened, why did a recent fall or recent increase happen? Does it make you feel more bullish on the stock? Be a little bit more aggressive. If I was looking at a bull put at this time, I know which one matched my criteria, but now that I know the stock, maybe instead of going with an 80% probability and a 12% return, I might be a little bit more aggressive. Maybe go with that 74, 73% probability with an 18 or 20% return now that you've seen the stock. It still matches your criteria. It's still a good position, but depending if you feel more confident or still like the return but a little less confident, go a little deeper in the money or a little bit deeper out of the money with the bull put, still getting the return and probability you want. Or go further out of the money with the covered call here for more speculation. Okay? All right, so now we've looked at our other strikes, but we're going to stay right here with our 26 strike. What's next? Profit and loss chart, right? I want to run my what-if scenarios. So, I'm sorry if that was, let me go back very quickly. I'm sorry if that was too fast for Jonathan. So when you're looking at that position here, whether you're on the search, a sample search, or even if you're tracking it in your portfolio, you'll have the choice to go to the profit and loss chart for your position. And again, it's great to see things graphically rather than numerically. Up here, you see where I could choose to try to change this to a collar if I wanted to add a little bit more protection. But then down below, I can go ahead and say, well, what happens if the stock does drop to 24.20, has a 10% drop on the position halfway between now and expiration? Well, it'd be a loss at about $95. Am I still comfortable with taking that loss, $95 off a $2,500 investment? Probably still comfortable with that. And I could still manage the trade, of course. But if I saw this go up to 220 for whatever reason, it wouldn't. But let's say it suddenly went up to 220 with a 10 or 15% drop. Am I comfortable taking a 10% risk? Not really. That's why I wanted to go in the money to begin with, to get a little bit more protection. And of course, am I still comfortable if the stock goes up to 28.80 or so, 28.60 I should say. But if it jumps up 10%, well, we're pretty much close to our max return even at the halfway point, August 8th. I could change that date. What happens if it jumps up 10% tomorrow? Well, we'd only have a gain of $79 on the position because it's still going to retain the time value. The cost to buy back the call would still be relatively high, jump up to $3.09. So we'd have $2.80 a time premium and about 30 cents a time premium, $2.80 of intrinsic. So I'm only making 79 of the 108. Well, still close to 80%, but again, that's what the what-if scenarios do. And if I wanted to, I could build an extra leg on the position. All right, so we've done our scenarios. We've done everything we want. What is my next step? In that case, this is not a recommendation or suggestion, but I'd go and place the trade with my broker, and then I'd add it to the PowerOptions portfolio to start tracking and managing the position, set my alerts, and be able with one click to evaluate rollout opportunities. But that's a different discussion, a different webinar. All right, as I mentioned, same thing I would do. We'll take our spread traders, but covered calls and naked puts, set up the same basic search. I'm going to go to bull put credits now. We're going to go to search. Okay. Now that we have our, hold on one second. There we go. Now that we have our results, what am I going to do? Again, we've got defaults for you to use as a stepping stone. I'm going to do it from scratch. I'm going to select standard August expiration. I could go weeklies, but I'm going standard August expiration. Let's start off with what we want. I want a minimum net credit of at least 50 cents. I'm going to want a percent return, let's say at least 8%. Want some protection. I'm going to go at least 5% out of the money. And I want a good probability. I'm going to want to start with a 75% probability of the stocks trading above my strike price at expiration. I personally am going to set my standard here, my strike difference. Difference in the strike price is to be greater than or equal to 2. Honestly, I don't mess around with 50 cent, dollar, or $1.50 strike differences. I'll have a report for you on why not coming up soon. I think it's going to surprise you. And again, basic liquidity. But this is still a bullish position. So I'm going to set, I don't have to worry about stock price, do I? No, because it's a leverage trade. I know the margin requirement, what I have to put up is just the difference in the strikes. But again, bull or bear credit spread or debit spread, covered call or naked put, I'm avoiding earnings between now and expiration. This is a bullish, so I'm going to look for a positive earnings per share growth, and I'll actually use pretty much the same technicals. 75 or 80% Bollinger Band range, stock trading above the SMA 20, MACD crossover within the last 2 to 3 days, and of course, positive. What does this mean? Well, I'm going to see a lot of the same stocks. I know that. I'll see Jinko Solar. Oh, no, I didn't. Okay. So we've got Netflix, Biogen, Avigo, BIB, all within the percent return range of what we wanted. All that match the stock criteria. And again, what would I do now? Same thing as before. Stock chart, is it going in a trend I feel comfortable with for this bull put spread? Any recent news or information that might cause me hesitation to enter the position? I take a look at that stock research tool. I know that I avoided earnings between now and expiration, but I maybe want to see when earnings last were for this stock. Dividend, would that concern me? Maybe, maybe not in this strategy, but I'd want to know it. Taking a look at that volatility versus SIV, other things you might want to look at, recent earnings surprise, all there in that one quick view. Instead of the option chain now, as I mentioned, for credit spreads, I'm going to use the midpoint spread chain. Okay, and well, I apologize, let me put this in here. This was, let me go 5, that's where that was. I just had to make a change here as well. Oh, and that's why the probability was too high. And it's 75, okay? All right, so there's the strike we linked from. My apologies, highlighted in red. But I can see, do I want to be a little bit more comfortable? Now that I've looked at the stock chart and the company information, do I want that better probability here on this bull put with still a double-digit return? Or is the bull call debit spread giving me a higher parity if I get midpoint? In this case, it is. The parity bull call debit would actually give me a 21% return with 87 cents profit versus 73 and 17.1, assuming I get the midpoint in the bull call debit. Okay, so when I'm comparing the new strikes or the parity for the credit spreads, rather than go to the option chain where I did with the covered call and I would with the naked put, I'm going to the midpoint spread chain. And the other strategies I'd use, for married puts, for example, I just use the search by symbol at this point, which would be right here. If I'm looking at married puts, calendar spreads, or collars to compare other strikes and risk-reward combinations. And for the long call, I tend to use the long option finder. Okay, so when I'm looking at the menu here, I'd link from a long call or long put, I'd link to long option finder, because then I can put in my projection for the stock to see which strike would give me the best bang for the buck. Okay, James said, okay, you've spent a lot on bulls, what about bears? I kind of reversed the technique, reversed the concepts. Let's take a look. I'm going to go bear call credit very quickly. The process that we're talking about for researching and analyzing is the same, but I'm going to reverse the aspects I look for in the stock chart, but I'm still going to look at company information, news, profile, and more. Once again, James, let's start from scratch. We're in bear call credits now. I'm going to clear filters. Keep things simple. I'm going to go standard August. I know most of you are trading credit spreads with weeklies. You can set that too. But I'm going to keep the same credit spread criteria. 50-cent net credit, 8% return, 5% out of the money. Probability below, probability that the stock would stay below both calls would expire worthless, keeping it at 75. I'm going to set my strike difference to greater than or equal to 2. Apologies, here we go. And at the same time, basic liquidity, at least one contract traded today and an open interest to greater than 10. Now, fundamentals. Avoid earnings between now and expiration. Let's look for a negative earnings per share growth. Let's go to our technicals. Let's look for a Bollinger Band range that's now less than 20, so it's near the bottom of the Bollinger Band. Let's look for stocks that are now trading below their 20-day moving average instead of above. And let's look for that MACD crossover where the stock has crossed, the MACD, has crossed under the signal line within at least the last 2 days. And MACD is negative, meaning that it's below that divergence line, okay? They'll show you that in 1 second. I maybe didn't explain that very well. Oh, there's nothing there. Okay. Let me just adjust this a little bit. I'm going to go back to none. I'm sorry, I'm going to go back to any and any. I'll show you why in a moment. Let's see what we've got. So there's nothing there right now that's in as strong as a downtrend as I might like. So now we'll loosen it up, okay? I'm going to go less than 30. Stock's in a downtrend, still below the 20-day moving average. And let's say that's just where the MACD has been under by at least 1 day. Oh, not 21, I'm sorry. The MACD has crossed under the signal line by at least 1 day. Wow. So I'm not seeing anything. I tell you what I could do that'll pop something up. Let me take the earnings out. Well, that's interesting. I wonder if there's an error. Do that. Wow. Okay. So what was hindering it actually was it wasn't showing stocks that had a negative earnings per share growth, which, by the way, I think is an error. I'm going to take a look at that in a moment. But again, that's what I would look for. Lower Bollinger Band, stocks under the MACD, maybe even a negative MACD. We talked about Chipotle earlier because of that. Let's take a look at the stock chart one more time. Yeah, okay, so maybe we missed the boat. Not necessarily saying that, but look, here's a double. The big crossover was here, okay? And it was kind of hesitating, and then it dropped below the 20-day. Then it dropped below the Bollinger Band, had a mini breakout here and the big breakout here at 420, okay? Now what's interesting is it just had another Bollinger Band breakout. This is probably where that neurovirus came out, the virus that was in the food that came out about it, and it had a secondary MACD. It started to maybe try to get back, but then it, boom, had that next negative MACD crossover, fell down as well, okay? So this is going in that downward trend, as was Alta Salon. That was the second one there, but that's what I'm looking for with the bearish. I'm looking for something that maybe has done this and done this as well. Now, James had a follow-up, says, well, how would you catch this or this? And we're kind of delving away from the topic of the conversation, but I'll show you real quick. I'm assuming we're not going to find anything right now. Let's loosen up the criteria a little bit. Okay, we're still out a month. I'm going to take that out. I'm going to leave a stock below the 20-day moving average, but I'm going to change this to where a stock has just crossed under the MACD within the last 2 days. And I'm going to leave the Bollinger Bands alone, actually. Because if I'm going to look for a Bollinger Band breakout, I'd look for less than 0. Okay, and I'm still going to look for stocks in a downtrend, but let me change the probability. Let's open it up 70, and let's just go 4% out of the money, a minimum net credit of 20 cents. Okay, just to open it up a little bit more. But these technicals I'm using are to see positions that have had recent, within the last day or two, MACD negative crossover and are trading below their lower Bollinger Band. I don't know if I'm going to find anything. No, it's no problem. Let's take everything out except for that. Here's what I'm going to do. I'm going to take this to any. I'm going to probability at least 50. Percent return at least 5. No, that's not the range. Volume today will keep. Net credit 20 will keep. Earnings date, well, no, let's take that out too. Sorry. And meh. None versus none. Let's just see anything that's crossed over and is recently broken below its lower Bollinger Band. 1. UHS down 819, might have had earnings. What does that look like on the chart? Yeah, earnings. Earnings decline. Recently, just MACD crossover 2 days ago, broke down below the lower band. I'd watch this a day or two more to make sure it continues that trend. Okay? But that's how you would set it up for bears, as well as what we looked at with the bulls also. All right. So, same process I would use. Well, we showed a covered call, of course. We went through the covered call example that we started. And we did that with the other positions. If I was opening, we did a search for covered calls and one for bull puts. We do the same with other strategies. Anytime you're opening a new trade, okay, or if a trigger's been hit and you're looking to manage a trade, I'm going to follow the same steps. I showed you how I use PowerOptions to do it, but I still want you to follow the same steps. Take a look at the stock chart. Does it follow the sentiment as you trade? Almost as important, if not as important, as finding a position that has the option criteria of the minimum net credit or minimum premium, return and downside protection, strike difference and probability. Just as important, if not more important, is the stock going in the direction you want? The tool will help you save time because you can set that ahead of hand, knowing that every stock you see in the results has a positive trend, maybe has a positive MACD or negative MACD, or is breaking above the Bollinger Band, or so forth. You've limited down the universe to just those stocks you'd want to look at to begin with, rather than seeing 200 positions in an open covered call screen and having to go through each one of them. Take control of that yourself. Honestly, what the search tool can't do is take a look at some of those unexpecteds, the company info, the profile, and the news, what to look out for. Remember, we talked about anything about a potential buyout rumor or sale of the company, CEO shakeup, CEO scandal, boardroom shakeup, anything of that nature, a pending lawsuit, pending patent lawsuit, anything out there that might cause hesitation. Mining and oil companies, things they're waiting for a lease to pass or a lease to get approved to drill in a new field. If they don't get it, that's going to have an effect on the stock. Of course, we want to check to make sure when the earnings are, and maybe even what were the last earnings. Were the last earnings positive or negative for the position? Okay, those are things to avoid potentially. Then we're going to use those other links. You might use others as your brokers, but it's really easy on PowerOptions just to link to those signature tools or the option chain to compare the strikes now that you've seen the stock, now that you've seen the trend, you've looked at the news and the company information and the events. Do you feel maybe more confident going with a little bit more protection at a lower or higher strike price depending on the strategy? Compare the risk and reward. Now, take a look at the profit and loss chart. Even after all of that, still look at the profit and loss chart, run the what-if scenarios, maybe add an extra option leg if you're concerned about protection. Convert the covered call to a collar on the fly. See if it still matches your trading goals and gives you more confidence with the protection as well. So those are the steps I use anytime I'm opening any new options position, regardless of strategy. Or if one of my triggers has been hit and I want to roll the position. So if I'm in a covered call and the stock fell below the call strike price, my alert goes off in the portfolio. I know I need to manage it. Before I even look at the rollout opportunities, I'm going to look at the stock chart. I know it's been falling, but I'm going to look at it with a fresh pair of eyes. If I was opening a new trade today as a covered call, would I use this stock? And if it's showing me a bearish trend, if I wouldn't open a new position on it as a covered call, I'm not going to just simply roll down my covered call, because if it still declines, I'm going to realize more losses. I may just get out or look for a way to convert my covered call to a bearish position, or convert my bullish to the bearish position. But again, to save you time, that's what PowerOptions does. Okay? Put in the criteria for your trading plan and what you'd want to see for a bullish, a bearish, or even a neutral position. A condor, for example, there are ways to force the Bollinger Band range to be right in the middle to some of those condensing periods. We've got other webinars on that too. And this helps you limit your research and analyzation time. Limit your search time. Put in the criteria first that you'd want, but then still follow the same steps with those quick links from the More Information button to make sure the new position matches your goals, the underlying matches your sentiment for the position, that you're confident enough with the strike that came up to match your results, and you didn't want to go to lower strikes or higher strikes by looking at the option chain, the spread chain tool, the search by symbol tool to compare strikes now that you know more about the position. And then once you've got it, you enter your trade and track and manage the position with the portfolio tools as well. Now, for those of you who are online who haven't done so yet, or maybe you haven't done it recently, remember you can take a 14-day free trial at any time. Just go to PowerOp.com. You can put in your first name, last name, and email address. You'll have full use of the tools for 14 days as well. And of course, after that, we have a variety of subscription services at the end of the trial. We do offer a low price, very low, $40 per month service, which gives you access to most of the search and all of the analysis tools and the portfolio as well. But some things are left out from the portfolio and the search results by email. But it's only $40 per month, and it comes with end-of-day data, so you don't get updates during the trading day. Our 20-minute delayed service gives you access to more of that information, what we call the picks of the day for covered calls, naked puts, and soon spread positions, and that's only $60 per month. And we do offer a real-time service as well. It's $120 per month. And in addition to that, we have historical tools, historical data that goes back to April of 2006. You can upgrade from the delayed service to access the back testing and historical tools. It's only $40 more, so it's $100 total per month for all of the tools on the 20-minute delayed service, plus the 11 years of historical data for the stocks, options, indexes, and ETFs as well. Okay, all right. Now, of course, you want some other free material. You want to check out some other webinars. There is a full webinar, by the way, on PowerOptions. Those are 29% of you who are doing married put positions. There's a full webinar on entering, researching, and analyzing a married put trade in the PowerOptions tools presentation and in the option strategies as well. But you can go to powerop.com/webinars.asp. That is a public page. You can access it at any time. And there's 4 categories you can see there: the PowerOptions tools, options strategies, options concepts, and the archives of our Friday open forum Q&A sessions. So you can check out those webinars at any time. You can also just go to our blog, blog.powerop.com. And of course, we're also on YouTube, so you can go to YouTube, look for PowerOptions. You'll be able to see some free public webinars and recordings there as well. All right. Well, questions? Please feel free to contact us at any time. Remember, you can send me an email to support@powerop.com. You can also, anytime during the trading day, give us a call. You'll talk to me or Ernie or one of our other staff members. Just call 302-992-7971 during market hours. Of course, I'm not going to be available for the next 20, 30 minutes or so, but I'll be available most of the rest of the day. And those of you that are trial members or subscribers, just remember at any time you can schedule a coaching session. Just go to the coaching session link, pick a time during the trading day that works for you, and then essentially you just have a 45 to 50-minute phone conversation with myself or Ernie. We'll walk you through the tools and answer any questions that you have. Well, ladies and gentlemen, thank you again for joining me today. I hope you enjoyed today's presentation. I hope you got some useful information out of today's presentation. I hope to see you online in the future at one of our online events. You can go to that webinars page I mentioned. You can register for our Friday open forum Q&A session at 4:30 p.m. Eastern Time. You'll also see listings there of our other upcoming webinars as well. Take care, everyone. Have a fantastic remainder of your Wednesday. Happy trading. We'll see you soon. Good night.